Introduction of Mexico. Mexico, officially known as United Mexican State. For you guys' information, Mexico is the country of southern North America and the third largest country in Latin America after Brazil and Argentina. The capital city is Mexico City and the currency is Mexican peso. Now, we will go through to our subtopic, which is the central bank and monetary policy.
Mexico is one of the largest countries with big population and economy that are stable. Mexico economy depends on export manufactured goods. Next, in this video, my team members and I will talk about the Central Bank of Mexico and its function, types, and also tools of the monetary policy. The Central Bank of Mexico is known as Banco de Mexico, or also called as Banxico. Banco de Mexico's main purpose is to provide the Mexican economy with a domestic currency. The principal goal is to ensure the stability of the buying power of the domestic currency. The bank's other functions are to facilitate the sound growth of the financial system as well as the efficient functioning of the payment system. After that, my friends will talk about the types, tools that Mexico has implemented.
So right now, I will share to you all what type of monetary policy that Mexico have used. So, the type of monetary policy that Mexico have used is contractionary monetary policy. Contractionary monetary policy is about aims to decrease money supplies, and it is used to control inflation. It is also used to solve the economic problems. The instruments used are they will selling government bonds through three tools, which is first open market operation, second increase the required reserve ratio, and third is increasing the bank rate. The three tools also can be categorized as quantitative monetary policy. Lastly, Mexico have used this type of monetary policy. It's because this contractionary monetary policy will lead to a decrease in real gross domestic product and lowering the inflation rate.
So right now I'm going to talk about the monetary policy tool for Mexico 2020. Okay then, so we go to the first one, which is open market operations. So, what is open market operations? Actually, this is the most effective tool used by the central bank. The central bank buy or sells government securities and treasury bills in the open market to influence the size of bank deposits. Alright, so when prices are rising, and there is need to more control them, contractionary open market operation is used, and then the central bank sells securities and treasury bills to the public. For individuals, firms and commercial banks will purchase these securities, hence it reduces bank deposits, the reserves and the credit creation of commercial banks. So commercial banks lend less to the business community. So if immunization, especially open market operation is used, the central bank buys securities from the public, paying them with checks, and then checks are paid into the general public deposits in the clearing banks. So the reserve of commercial banks are raised and banks can lend more, resulting in an increasing in credit creation and money supply, which leads to the fall of interest rates. So this will then result in increase in investment, aggregate demand, and employment. Okay, so we're back to Mexico. Banco de Mexico operations monetary policy is implemented through open market operations in order to balance any lack of or excess liquidity in the accounts that banks hold in Banco de Mexico. And these imbalances result from transactions held between banks and Banco de Mexico, which demand for the bills and coins for buying or selling of foreign currency and transactions between depository institutions and the federal government's account in Banco de Mexico, among others. So, if open market operations were not carried out, any excess or lack of liquidity will affect the conditions in the money market. So, depending on each particular day's conditions, Banco de Mexico can option credits which provide liquidity or deposits which withdraw liquidity.
I will talk about reserve requirement. So reserve requirement is also called as cash reserve ratio. So the function of reserve requirement is to limit the amount of loans that banks can make to the domestic economy, thus limiting the supply of money. In 2015, for a variety of reasons, reserve requirements are no longer used as a monetary policy in advanced economies. In contrast, monetary authorities in major emerging market economies have continued to use reserve requirement as an alternative to interest rates in pursuing financial stability objectives. Central banks have used reserve requirement to complement conventional monetary policy. Depending on the country and period, reserve requirement has supported at least three policy objectives. The three policy objectives are to reduce bank liquidity and solvency risk. Secondly, to manage system liquidity widely. And lastly is to affect market rates and monetary aggregates. If deposits and central banks credit are imperfect substitutes, higher reserve requirements will not be fully accommodated by increasing in bank borrowing from central bank.
The last quantity monetary policy tools is bank rate policy or discount rate. BRB, or known as bank rate policy, is very an important element in monetary tools. This is because monetary policy can influence the quantity of the credit in a country. Next, the bank rate or discount rate is the rate of interest which a central bank charge on the loans and advance to a commercial bank. In Mexico monetary policy, whenever commercial banks have a shortage of funds, they can borrow from the Mexico via the bank rate or discount rate. But the changes in bank rate or discount rate will cause changes in the Mexico market. Interest rate fall in Mexico. Mexico has lowered in interest rate by 0.25 percentage of points from 4.5 percentage to an annual rate 4.25%. A reduction in interest rate counters weakening of a prices of or a possible deflationary situations. This change is the first to have taken place since 14 August 2020, when the central bank lowered interest by 0.25%. Last but not least, this will reduce investment and aggregate demand in Mexico.
In conclusion,
The role of central bank, which is Mexico, and monetary policy is very important for a country to develop the country's economy. As we know, Mexico's economy is still in recovering phase as coronavirus outbreaks in March